Gold has finally delivered first red candle, and this is what we were talking about in my last weekly update as well. I have mentioned that bulls appear to be exhausted, and 29.55.56 is the zone which you should watch out for. Precisely hitting the level, it has reversed sharp and it has moved all the way towards 28.30 before closing at 28.60. And that is what repeatedly we talked about, that sooner or later gold prices need to correct. Can we say that this is the beginning and we can look forward to a further correction all the way towards 27.50, 27.40 levels in the month of March? Or it is going to be another bullish month where the prices are heading all the way towards $3,000? What is going to be our strategy for the trading gold in the month of March and specifically in the coming week? We're gonna see with the help of charts and indicators. Towards the end of the update, I'll be sharing the trading levels. So do watch till. This is a monthly and weekly review. I do provide twice a day updates for gold. To get the regular notifications, subscribe, press the bell icon, do like, share, and comment. That's always a great motivation from you all. Your reading your comment definitely gives me a motivation to deliver consistently to the best of my abilities. So do like, share, and comment. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. All the links are there in the channel and video description. Now let's first, when you look at the weekly chart, see this is how gold has been trading for multiple weeks now. Now, these two times it has hit the peak and has moved towards the bottom. This time it is shying away from the top here so far and trying to reverse. That is the first observation. Second observation, prices are outside Bollinger Bands. You can see greater resistance is offered here on the upside. Three candles beautifully aligned, and then we have seen this first reversal. Now remember, hitting the highs, we have seen first red candle, and the bottom of the channel now lies at around 27.50, 27.60 zone, and this zone is going to be definitely critical for gold. Also notice the 20 period moving average, which is right now sitting at around 27.20. These levels are going to remain critical because whenever you see divergence of price from the 20 period moving average, the probability of a convergence towards the 20 period increases. See what has happened here, it is stayed elevated, and then in 2 to 3 weeks you have seen price is moving all the way towards 20 period. Same what has happened here, got, you can see prices move towards 20 period moving average, and not to move further, you can see similar observation here. Now also notice it's been almost you can say 14 months. See, this was the crossover in the beginning of 2023, not 14 months but 24 months since we have seen the moving averages consistently traded with divergence and bullishness. Possibility of a reversal, that is the prices to trade below 20 period, is high, but we have to wait for a clear direction. So coming week is going to be very important. In general, we see 2 to 3 red candles in formation here, because see these are series of bullish candles and now series of bearish candles might follow, and thus coming week is going to be important. Where it starts the week and how it performs, that is going to be important. Only bullish confirmation in gold for the next week and for the month of March is if it breaks beyond 29.20 levels. 29.20, 24 levels is where you can say now we can in fact expect higher highs. So as long as 29.20, 24 zone is not taken, we have to be careful with the buys. In fact, I will say 2900, 28.95 should be the first stronger resistance. If at all it starts to move upwards, why it will start to move upward? Because see, we have seen gold prices trading oversold for on the smaller time frame. Does it suggest that in the coming week it may start off the week with a slight retracement, slight rise, consolidate there somewhere around 2900, and then start to reverse? Not 2900, in fact slightly lower levels are possible, 28.85 to 86 levels. Hitting that zone, possibly it can try to reverse and trade bearish. That is the first observation what we can have on the weekly charts. But when you talk about the monthly charts, it is possible that the reversal confirmation in gold is if you see it is staying above first 28.95, 2900, then 29.20, 24, and then specifically any move beyond 29.55, 56 zone. Now second thing here to note, the stochastic, this is staying overbought, this is trying to cool down, and thus possibility exists that we may see now series of bearish candles ahead in gold prices. Notice what it is doing, divide this into two, overbought, overbought, try to cool down, trying to cool down. We can see the bottom here. Look at the MACD. Notice that on MACD rise, retracement, higher lows, higher highs, and now trying to retrace. Second thing is the crossover here was from the peak. We have seen prices retracing, and now again it is crossed over on the buy side. Now, after staying bullish, now it is again looking downward. So I will wait for a round of crossover, because whenever this crosses over, it may take, towards the end of the month we will realize that whether it is going to reverse completely or not. But certainly this is at a higher level, and hence the reversal might follow very, very soon. The RSI is also entered into overbought zone. We have always seen whenever it enters into overbought zone, it follows with a good dip. Let's wait for this correction to continue. Coming to now on the daily chart itself, it's almost 8 weeks since the crossover on the buy side, and largely if you see, this was mild consolidation. Else you can find out the on the daily charts itself, since October last year, we have seen the moving averages consistently trading bullish. Now here what has happened after a long time, you can see now price is closed below 20 period moving average, which is a bearish sign for now. Also, if you notice, see what it has delivered for last few sessions, lower highs and lower lows are seen here. And this also confirms that till 2900, and then 29, 20, 25, 24, you have to be careful. Only and only if gold is seen trading above 29, 20, 24, you can say little bullishness should be seen, and then you have to wait for it to break beyond 29, 55, 56, because that will be the reversal confirmation. It is possible that this is just a mere retracement and the prices flies off all the way towards the highs. But if you look at the formation here, it is formed a cusp, and it is now looking downwards. The moving averages are now starting to converge, and hence the chances of bearishness in the coming week at least are there. But on the monthly charts, we will look at what to expect in the month of March, because I can see that the on the monthly charts the prices have still closed in green. The stochastic has dropped. The MACD, interestingly, the MACD has crossed over here at the top, and now it is trading with divergence. Look at this. This is a megaphone here, and whenever you see such formation, look at this, a straight line fall. And see, this was from a moderate level, but this crossover has come at a slightly higher levels. In fact, when you look at the history, see, this was the last year April, when we have seen the crossover at the top, and then this sharp fall has appeared, and the similar pattern is observed here. And thus it appears that on the buy side we need to be extra cautious. RSI dropping here, looking downwards. I'll just have a look at the 4-hour charts also before we'll move to the monthly charts, the most critical. See, on the 4-hour charts, the crossover here has appeared after multiple weeks. You can see this on the 4-hour charts. This is crossed over on the buy side in the month of beginning of 2025, beginning of January, and for 8 weeks we have seen this staying bullish. Now see, such a smaller time frame, 4-hour charts also, we have seen extreme bullishness, and it has crossed over now. That the possibility of slight downside exists strong, where the prices can in fact move towards 27, 60, 40 zone. Now what has happened towards the last few candles? See, there is a slight reversal confirmation. There is a possibility that the prices might retest somewhere here towards 28, 85, or in fact 2900. But I do not expect it to confirm a complete reversal, that is a move beyond 29, 20, 25. I do not expect it to do so. And thus every rise is an opportunity for us to possibly stay with the sales. That is my expectation. But when it's rising, you have to go with the buys, enjoy the buys, and then sell at the peak, and then you can make profits. Stochastic rising, that is a good sign. Look at the MACD on the 4-hour charts. We have seen a sharp dip. This also confirms that it is possible that now for the next few candles, gold prices might start with a little retracement. RSI has come to an oversold zone. Now the most important one, the monthly. Now first thing is observe the pattern here where it is closed. It is closed at the top. If you connect the dots, you will find this is how gold has been trading. This is a strong bullish channel here. And now 2720, 2760. This is the zone which is going to remain most critical for gold. Yes, also the prices are trading with too much of divergence from the 20 period moving average, which is right now sitting at around 2400 levels, and these are the levels from which this rise has started. Notice, if you connect this like this, you will find This is an extremely strong and expanding triangle. Chances for the pullback are still very high. On the monthly charts also, whenever it shows such a rise, it follows with months of retracement. Now this is the second round of rise. It might follow with a months of retracement, and the month of March is going to be critical because the trend it sets here is going to remain the trend for next few months. So this is a long term view. For last 4 to 5 years we have seen gold following this, and now next few months are very critical here. The lows are all the way towards 2200, 2300 zone, but let's focus on the coming month. Now see, the candle closed in green. It is still a good sign for the bulls, but notice the body size here is less than 50% of the complete move. In fact, I can see that it is almost 30% to 40%. So this suggests that the prices were not, or the bulls are not very much interested in keeping the prices elevated for a certain time. And now notice, once prices trades below 2800, then 2780, then 2760 and 52, we can say this zone first at 27 40 60, this complete zone is going to remain very critical. And if the prices drops below 2720 in the month of March, remember, once the prices trades below 2720 in the month of March, there is a strong possibility that we may look forward to a greater correction here, which can in fact erase all the gains from this candle. So we have to wait and watch how it behaves and where it closes in the month of March. That is going to be pretty important, because if it closes in red, this will become the reversal sign for gold, and the next few months might be of correction here. Stochastic is staying overbought. Look at MACD. Now MACD is at extreme. If you watch my monthly annual review for gold, I have mentioned very clearly, at best the prices might stress the rise for Q1 2025, and that is what we had seen for at least couple of months. Prices hit the highs. Now these are the highs on the MACD which we had never seen in the history of gold. Whenever it is showed, in fact, post financial crisis we have seen the highs like this. Post COVID also we have seen the highs like this, but this is a breakout move. Trading with extreme divergence calls for it to converge soon, and that is what we will wait in the month of March. Look at the MACD here on the monthly charts. Extremely overbought, though too early to conclude that it is going to reverse like this, because uh, it is still not showing signs of complete exhaustion, and thus you have to watch out here. So now we have seen the charts and indicators. Time for me to give you the levels here and provide you the summary of our observation. Before I provide you the levels, if you want to learn this art of trading, join my mentorship batch. And if you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me, write an email, ping me or Telegram for your queries. And if you're looking forward to a broker which offers you a SWIFT-free account with lower spreads and no hidden charges, easier transactions, and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. Now, as we have seen on the smaller time frames, things are slightly oversold here for gold, and thus a little recovery is possible. First, let's talk about the levels to buy. I will recommend you to buy if you see it is staying about 2864 levels. Remember, 2871.72, the first target zone, 2878 the next, then 2885. If this is taken, chances will be high that we may 2885, 88 actually, so very nearby resistance. And this is why, because see, we are talking about a little retracement towards the beginning of the month. Prices may try to hit a little high before it looks over to a little, you can say, before it takes the original direction, the real direction which we are expecting, which is on the sell side. So a little retracement is possible here. Then I can expect it to move towards 2895, 2900 levels. And these are the levels which are going to remain first greatest resistance here on the upside if at all prices starts to move upwards. Beyond this, you can look forward to 29, 20, 24. This is going to be the next strongest resistance here. If this is taken, if these two levels are taken any point of time in the month of March, you can say now the bulls are here to stay. We can in fact expect price to move all the way towards 29.55. And if that is taken, I think or rather I will say 29.5560. If this is taken, then you have to just stay bullish. There is no other option. We are looking at 29.85, 3000, and then 30.50. These are markets. Anything and everything is possible, although I'm not in favor of such a rise. Looking at the chart, looking at possibility on the technical indicators. On the sell side, I will recommend a selling entry at 28.48 levels. Expect 28.40, 28. So these are all plus minus 2 here. You can say 28.30, 32, and then towards 28.20. If 28.20 is taken, we can say now the bears will be active here. Chances of a move towards 27.80 will increase from 28.20 to directly we are moving towards 27.80. And if 27.80 is taken, 27.60, 27.50, and then 27.40 will come into picture. Till here it has got extremely strong support. So this is for the complete month of March. For the next 4 weeks, these levels are going to play a major role in deciding the direction for gold. Below 27.40 you can expect 27.18, and if that is taken, then we are ready for a greater correction for the next few months, where the prices are going to go well all the way. The next targets are going to be towards 2650 and 2600, but yes, too distant a dream, and thus you should be trading with caution. So take your trades accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my signals channel, reach out to me for your queries, join the free Telegram channel for live updates, and the channel memberships here on YouTube to support the effort. The daily updates, do not miss to watch. These updates are very critical. It gives you a fair bit of idea on how to profit throughout the day and the direction of gold for every day. First with the Asia and Europe session, next with the US session. Subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live updates. Join the channel memberships here on YouTube to support the effort. Thank you. Have a great profitable month of March and a profitable week ahead. Thank you. Happy